Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see, first of all, is that this market is testing and rejecting a quite strong historical structure level for this market. This area, in fact, was acting as previous monthly support and demand here, preceding all this rejection to the upside, again, as support and demand here, again here. And what we can see is that just a few months ago, the market tested this exact same level once again. It started rejecting it to the upside, as you would usually expect in a situation like this. And we could expect more bullish continuation to be created away from this level, as already happened in the past, every time that the market tested this area. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, the situation is quite clear. We have a market which at the moment is retesting previous weekly resistance turned support. In fact, from here, multiple rejections to the downside have been created. Now the market broke back above the zone with this impulse. And what we know is that in the market, previous resistance, once it is broken to the upside, becomes support. So the market is actually currently retesting previous weekly resistance turned support, and we could expect a potential rejection to the upside away from this area. We can also notice another thing, that if we look at this market from a pattern standpoint, we can notice a very clear impulse followed by a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50%, 0.618 and 0.786 Fibonacci retracements all lining up exactly at this area, therefore creating a confluence of support exactly inside of this area that we could expect this market to want to reject to the upside. So also here, the weekly time frame seems quite bullish. Now, dropping down on the daily time frame, what do we see? From a daily perspective, I have spoken about GBPUSD just a few days ago. I spoke about it when the market was around this area. I explained all the reasons for which we could expect first this correction, and then from here the rejection to the upside. And in fact, that is exactly what the market gave us. And by the way, you will find those two previous analyses linked in description, so you can go and check them out for more free education. Now, in a situation like this, what kind of structure the market is creating? Well, in this case, what we can notice is that in creating this move to the downside, the market is also creating an M pattern. And in general, after the creation of an M pattern, what you could expect is for the market to want to complete that M pattern, and an M pattern is completed with a rejection to the upside. So here on the daily time frame, what we could expect is a bit more bearish continuation, but overall, I would expect a potential rejection to the upside for at least the completion of this M pattern, because since we have that confluence of support in the weekly time frame that we have just identified, there is very good probability of seeing more institutional longing, which at that point would further increase the probabilities of a potential push higher, also completing this bullish pattern here from a daily perspective. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we look at what is being going on, the first thing that we have to keep in mind is that if we're checking the data for the GBP, we're actually already checking GBPUSD because all currencies on the spot are traded against the USD. And what we can see here is that net positions have been massively increasing. In fact, we went from having 34.4K net positions all the way up to having 70.4K net positions. So institutions have been increasing their longs quite aggressively, going in fact from having 58.7K longs all the way up to 123K longs. And at the same time, we can see how shorts have just increased of a very small fraction compared to the longs. So clearly net positions just increased massively. And if we look even more in the past, we can see how shorts got massively decreased. In fact, the high here was at 85K. Now we're sitting at only 52K. So actually, if you go even more in the past and check what was going on, we can see how in the long run, we went from having minus 27.7K net position, so a negative net positioning, meaning that institutions had more shorts than longs. In fact, they had 80K shorts compared to only 52K longs, to now having the complete opposite. So one of the highest net positions that we had so far, with way more longs than shorts, with 123.2K longs and only 52K shorts on the GBPUSD, because as we just said, every currency is traded against the USD. And by the way, now you go back to the analysis, but if you still haven't, make sure that you go and join my free Telegram channel, which you find here on the screen and also linked in description, so you never miss new updates. Now, back to the analysis. Keeping that in mind, so that institutions are longing GBPUSD aggressively, and moving back to the chart, from a technical perspective, as we have just identified, is that all this area is actually confluence of support, and we have this bullish pattern from a daily standpoint. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential push higher, completing this M pattern at the neckline and rejecting the confluence of support that we have previously identified. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.